и заместителя председателя Алексея Заботкина. И вначале председатель выступит с заявлением по итогам заседания Совета директоров. Пожалуйста.
Добрый день. Сегодня мы приняли решение повысить ключевую ставку.
Есть. Monetary policy tightening is already being translated into the economy. This is evident from higher interest rates on savings and a slight slowdown on lending. However, the steady expansion of demand has been increasingly surpassing the potential to ramp up the supply of products and services. Consequently, prices are rising faster than expected. Fiscal policy easing is another pro-inflationary factor over the forecast horizon. Therefore, it is essential to tighten monetary policy even more. Our policy will support a more balanced growth rate of credit that would be in line with the objective of returning inflation to the target of close to 4% next year. I would now dwell on the reasons behind our today's decision. Firstly, as regards inflation, price growth rates are high. The inflation acceleration in September significantly exceeded our estimates. Strong pressure on prices persists in October as well. Even leaving aside one-off factors, the current increase in prices is at least 2 times faster than target inflation. All indicators of persistent pressure on prices exceed the target. A matter of concern is companies' price expectations. They are now close to multi-year highs. Households slightly lowered their inflation expectations in October, but they are still high. Analysts' inflation forecast for the next year exceeds the target, which is obvious from the findings of our macro survey. High inflation expectations in the economy are also a sign of insufficiently tight monetary conditions that have formed by this point in time. Although our decisions are already being translated into the economy, current inflation is still largely impacted by earlier lower interest rates offered in the first half of 2023. I would like to remind you that we had been maintaining the key rate at 7.5 per annum for 10 months until July. Alongside expansionary fiscal policy, this helped return the economy to the pre-crisis level within quite a short period. However, the further significant acceleration of inflation signaled that monetary conditions in the economy were actually accommodative. Therefore, in the middle of the year, we began to raise the key rate. However, because of the long time lags, the effects of accommodative monetary policy are still passing through to prices even now. Similarly, the effects of monetary tightening will fully translate into the economy several quarters later. We have updated our inflation forecast for both 2023 and 2024. The revised forecast takes into account the actual rise in prices, as well as the effect of high government expenditure in the new budget. This year, prices will grow up by 7 to 7.5%. Next year, influenced by monetary policy, inflation will slow down to the target, approximating 4 to 4.5%, and later on, stabilize at a level of close to 4%. Secondly, the economics. According to our estimates and recent data on economic activity, GDP growth in the third quarter was higher than expected. The main driver was investment demand that was largely supported by budget expenditures. Besides, the fiscal stimulus is focused on manufacturing sectors, demonstrating maximum growth rates. Due to high domestic demand, companies were able to pass through their rising costs to consumer prices. Accordingly, businesses' profits are close to the record highs of 2021. The increase in companies' equity, along with budget expenditures and lending growth, enabled businesses to ramp up their investment plans. According to the monitoring of businesses over recent months, companies have become even more optimistic in their estimates of future investment in the expansion of their production facilities, although interest rates on loans have risen. However, the staff deficit is considerably dragging down the expansion of production. 2/3 of respondents are now facing this problem that is especially acute in manufacturing sector. To retain or hire personnel, businesses are raising wages, which is inevitably followed by price increases needed to cover costs for higher wages. As long as increasing demand cannot be covered by ramping up output immediately, Its growth does not result in higher consumption, but only pushes prices higher up. To prevent inflation from spiraling out of control, we need to maintain high interest rates in the economy. Considering the actual GDP dynamics over the second quarter and the recent data for the third quarter, we have raised the forecast growth rate of the economy for this year to 2.2 to 2.7%. The GDP forecast for next year remains the same. I would now speak on how monetary conditions have been changing following our earlier decisions. Deposit rates have been adjusting most quickly. The growth of interest rates makes it possible to offset losses caused by high inflation. As a result, households' demand for deposits has increased. People are now not only transferring their funds from current accounts to time deposit, but also returning the previously withdrawn cash to banks. The pace of adjustment in the credit market varies across segments. According to recent data, unsecured consumer lending is now demonstrating signs of growth slow down. Mortgages continue to increase fast, but this segment is affected by subsidized programs that are not sensitive to key rate changes. The portion of the mortgage portfolio formed at market rates is already responding to the monetary policy tightening. As regards corporate lending, the annual growth of the portfolio reached 21.5% as of the beginning of October, and corporate lending is expanding despite high interest rates. This is because companies have high price expectations and therefore do not consider current lending conditions as tight. In other words, many businesses could raise loans expecting that a further acceleration of inflation will depreciate their debt. Another driver behind corporate lending is the fact that some companies are ready to raise short-term loans at higher interest rates, expecting payments under state contracts at the end of the year. More details about monetary conditions are available in our October Regional Economy Report. Our today's decision on the key rate will increase money market rates. Accordingly, interest rates on short-term loans will be higher than those on long-term loans, which will intensify the disinflationary effect from our policy. I would briefly talk of the budget. Fiscal policy will be much more expansionary than we assumed in our September forecast. A stronger fiscal stimulus reduces room for an increase in private lending. Considering this fact, we have lowered the forecast growth rate of lending to the economy for the next year by 2 percentage points to 5-10%. As long as fiscal policy will be generally more expansionary over the next years than expected, we have raised our estimate of the neutral key rate to 6-7%. In other words, all else being equal, we need a higher key rate to be able to ensure price stability. Now, I would like to speak of external conditions. The growth of the world economy continues to slow down gradually. Moreover, the situation in the Middle East is an important factor of uncertainty, including as regards possible changes in energy commodity prices. Our updated forecast assumes slightly higher oil prices. By the way, I would like to note that we have started publishing forecast prices for Brent instead of Urals. We will thus be able to better present our view of the balance in the global oil market and compare our forecast with the price used for taxation purposes. The reversal of the dynamics of the balance of trade and the key rate increase from mid-August have had a stabilizing effect on the ruble exchange rate. Nevertheless, the fluctuations observed during this time were largely associated with taxation periods and a number of large corporate transactions. As to the contribution of the requirement to sell foreign currency revenues, we will be able to assess it after receiving comprehensive data. However, we believe that such restrictions can only be efficient over a short period, slightly accelerating the effect of fundamental factors. Further on, the exchange rate will be influenced by monetary policy tightening that is cooling down aggregate demand, including the demand for imports in ruble terms. Another factor that will be impacting the exchange rate will be the movements of export prices and quantities and the dynamics of the balance of trade related to them. In our updated forecast of the balance of payments, we have raised the estimate of exports due to a higher forecast price for oil. The forecast of imports has been lowered as import quantities are expected to stabilize and respond to the key rate increase. Overall, the surplus of foreign trade is expected to be slightly larger than assumed in the September forecast. I will now speak of possible risks. As before, the ratio of risk is significantly shifted towards pro-inflationary ones. The most important of them are still elevated inflation expectations of businesses and households, faster lending growth, more acute staff shortages, and more expansionary fiscal policy. A possible slowdown of the world economy that might affect the exchange rate remains on the list of risks. Disinflationary risks are weaker. They include an additional rise in prices for Russian exports and a faster cooling down in the credit market. Winding up, I would like to comment on monetary policy prospects. The Bank of Russia possesses a set of efficient tools to reduce inflation to the target. We were raising the key rate sufficiently fast at our recent meetings and will be ready to do this again if there are no signs of a steady deceleration of inflation and a decrease in inflation expectations. Inflation has been persistently deviating from the 4% target beginning from 2021. Such a long-lasting deviation might unanchor inflation expectations and confuse economic agents. Our experience shows that the period of high interest rates in such conditions should be longer. This is what makes the difference between the current situation and the two other cases of significant key rate increases in 2014 and 2022. Then, in addition to faster inflation, we also observed material risks to financial stability, largely induced by external factors. We had to address these risks by changing the key rate. After mitigating these risks, we were changing the key rate, focusing on the objective to slow down inflation. I would like to emphasize that disinflationary processes in 2016 to 2017 were supported by contractionary fiscal policy. The current situation is totally different now. We are facing inflation caused by the internal imbalance between demand and supply. Demand is expanding, whereas the increase in supply is hindered by restrictions. Consequently, price growth is accelerating. Moreover, fiscal policy will remain expansionary during the next 3 years. This means that monetary policy should be tighter to ensure the return of inflation to 4%. In our updated forecast, we have raised the path of the key rate. The average key rate will equal 15 to 15.2% per annum over November-December 2023 and 12.5 to 14.5 per annum next year. This key rate path will help return inflation to the target by the end of the next year and stabilize it at the level of 4% in the future. Thank you for your attention. Dear colleagues, your questions now. Don't forget to introduce yourselves and identify your agency. Anastasia Perova, first question. Anastasia Savelyeva, Interfax Agency. Based on your statement, the raising of the key rate trajectory for the next 3 years, does it make reasonable to talk right now about the possible decisions to reduce the key rate, when and against which conditions you may go for that? And my second question, what is the level of accommodative nature of the fiscal policy against the current key rate increase? Can one say that if the budget for 2024 would have stayed within the current framework, which is 2023-2025 format, the key rate would have gone up just by 100 basis points? With regard to the possible decrease of the key rate, one will be able to switch to that once we acknowledge a stable slowdown in inflation in its stable components. Based on our baseline forecast, we see that this may occur next year. But, of course, if there are deviations from the baseline scenario and inflationary risks manifest themselves, we will account for that in the monetary policy trajectory, then it might be more tighter. When specifically we may be switching to the accommodative path, we cannot say right now. That will depend upon the inflation data, inflation expectation information, etc. As far as the impact of the fiscal parameters upon the key rate decision, that is a significant factor. We took this into account, but we didn't estimate then the range by which the rate can be brought up, because we consider all factors comprehensively. But of course, the budget is an important one in terms of our today's decision. Thanks very much. Next one, Sergey, please. Sergey Bolotov, Arguments and Facts. Could you please tell us what is the way that the central bank is planning to bring inflation back to the 4% target as far as food, fuel, and regulated tariffs are concerned, which are not very sensitive to the key rate changes? And my second question, what's your take on the practices when people putting down their money into the savings account and then go for the subsidized mortgage, trying to make a bit of a profit in between the differences thereof? As far as the first question is concerned, the key rate is what we use to impact all goods and services, but indeed there are certain goods and services prices, the consumption of which is independent of the price, including the ones that you've mentioned. And then the producers and suppliers have a greater capacity to raise prices. And against a high inflation and a fast demand growth, prices for such goods may grow faster than the general price index. And certainly with the help of the key rate, we do not impact directly any specific products like cucumbers or fuels, but we restrict the overall price growth, which means that, for example, against the 4% inflation, you're spending within a average consumer basket grow at average of 4% pace. And if inside that basket prices for goods and services that you cannot give up on demonstrate faster growth, then the demand for the rest of the products is going to diminish, which means that prices for other products are going to demonstrate slower growth. Now, tariff indexation, the key rate also impacts that, because indexation usually is related to the accumulated inflation. Our key rate influences inflation, and respectively, if the general price index is smaller, then the tariff indexation may also be lower. But of course, in order to restrict the prices growing for specific products, I suppose one would expect the government to undertake measures. Actually, that is what it is doing, temporarily, or regulating the demand and supply within specific market segments, like in the case of restricting the exports of gasoline and diesel fuel in September. But we think that administrative measures can only produce a short-term effect. In the case of a long-term period, production of certain products may not be profitable and result in a shortage. Now, as far as mortgage market is concerned, in a situation when you have subsidized programs being offered broadly, that is quite a sensible and rational behavior when one can receive a subsidized loan at a fixed rate while keep your savings in the bank at a high interest rate. It's not just some kind of an en masse practice, but this is definitely something that concerns us, and it makes us being watchful, because that enables people with savings to make money off the loans. So based on fact, this is the taxpayers' money which flows towards those who have savings and who can benefit from high interest rates, and certainly other people are suffering. I mean, the ones who really need housing, because such broad housing programs push up the housing prices further up. And you know that housing prices in this country have grown substantially, 90% over the past 3 years, much higher than inflation, and the rate of general income flow, which can really downplay any positive benefit from any subsidized mortgage program. Therefore, we believe that such broad programs are appropriate only as an anti-crisis measure, and by curtailing them, this unfair situation that you are referring to is going to dissipate. Thank you. The next question comes online. Denis Yalochovsky. Good afternoon. 2 questions. The Bank of Russia has supported the decree to introduce for the period of 6 months compulsory sale of. Could you please speak up? Could you please speak up? We can hardly hear you. All right, let me try it louder. The Bank of Russia supported the decree to introduce the compulsory exporters' sales of their export revenue, but previously it hasn't considered this to be necessary. What has changed in the central bank's attitude in order for the central bank to hypothetically support the introduction of this particular decree? This is my first question. Now, my second one, loans by the banks to the legal entities worth 29 trillion rubles, half of the portfolios were issued at floating rates. And so, comprehensive question based on that, what's your view towards the banks loading up the borrowers with the interest risk, and won't it transform itself into the kind of problem like we used to have back in 2008 and 2009 with the hard currency loans? And generally speaking, what's the share of the currency-denominated loans that you foresee further being out there? As far as the efficiency of the currency restrictions are concerned, our position hasn't changed. We believe that such kind of restrictions, if they do produce any effect, that could be expected within a short-term period, and that the exchange rate is being formed under the influence of fundamental factors, imports and exports, and the national currency being sufficiently attractive as the means to save. Currently, this is a temporary measure, and it affects major exporters, and we and the government are going to monitor its effectiveness in order to assess how efficacious it is. So short-term effects may be expected, and those will be related to a lower short-term volatility in the currency market, because the turnovers are going to grow. In our case, our exporters, major exporters, even if they redeem more of an export revenue, although the level of sales from the currency revenue is going to remain high, they may buy back. That may increase the turnover, and that may indirectly impact the short-term volatility. Now, with regard to the floating rates, interest rates, I shall remind you that it's almost non-existent in consumer loans. In corporate loans, there is such a phenomenon, and it's a global practice because it is believed that the corporate entities are in a position to assess their interest risks, which always exist. Either that is something that stays with the bank when a company borrows at a fixed rate, and this is the interest risk that bank transfers in terms of the raising the risk related to the fixed rate lending, which is becoming more expensive simply because the banks carry that burden, or respectively a borrower accepts this interest rate risk, and then the rate from the very beginning could be lower, but the interest risks in this case is with the borrower. Now, the situation like it used to be the case with the mortgage currency denominated loans is not there, because in those days it was sought after by the individuals who were not in a position to assess the risk related to the floating rates. We are standing for the tough regulation of floating rates for individuals. As far as the legal entities are concerned, we currently do not see, for example, in the banking statistics, we don't see any growing of the restructuring related to the floating rates. So we don't see this as an issue, and in our mind, the companies have enough profits. There is an economic growth which enables one to service such loans. Mr. Zabotkin, please, yes. I would like to also add there is a principal difference between the story with the currency loans and the currency-denominated mortgage market and the floating rates. Everyone should understand, and that goes out of our rationale and the monetary policy, that the period of high interest rates is temporary. Yes, it will now have a more extensive incidence compared to 2015 or 2022, but nevertheless, as inflation will be going towards 4%, the key rate will be also returning to its neutral range as we see it in the forecast, and consequently this higher level of interest rates related to the floating composition would mean that they will stay in effect over a considerably short period of time. Now, when the exchange rate changed towards a principally new one without returning into the range where people went for the currency-denominated loans, their debt burden went up for perpetuity, and that is basically the difference between the situation with the floating rates and the currency-denominated mortgage loans. Thank you so much, dear colleagues. Margarita, in the first row. Good afternoon. Rita Shpilevskaya, TASS agency. Could you please tell us whether the decision to raise the key rate by 2 percentage points was the toughest one, and how broad was the board of directors' consensus? And the average rate for this year up to 15.2 doesn't mean that there might be another increase towards the end of the year. We looked into 3 possible options. We didn't discuss keeping it as it was. No, we did not. We discussed such options as raising the rate by 1 percentage point, by 1.5 and 2 percentage points. But the prevalent majority, even in the process of our debate, went for 2 percentage points decision. Considering the analysis that I've shared with you and the pro-inflationary risk, as well as the risks that have already manifested and the future ones that are being expected. Now, in as far as the current year is concerned, we came out with the key rate forecast towards the end of the year. We've got 1 meeting dedicated to the key rate remaining within the year, so it might be also about keeping it as it is, as well as raising it further. Thanks very much, colleagues. Dmitry, next one. Dmitry Butinko, Commandant. So you have updated yet again your forecast. There are 2 external variables that you have changed. You've described them, the fiscal stimulus as well as the oil prices based on your forecast. Are there any other factors that have forced you to review your forecast, which could be comparable to this in terms of the distributed weights? Yes, this is a significant factor, particularly the first one that you've mentioned, which is the fiscal stimulus. However, there are other ones at play as well. The third quarter factor, I mean this year's, in terms of the actual inflation, as it turned out that it is higher, which means that the gap between supply and demand is stronger than what we have assessed previously, and that was also a significant thing. Mr. Zabotkin, yes, if you could elaborate it and take a look at the current data, economics in the third quarter, inflation, lending activity growth, all of these values are higher at the end of the third quarter than what we expected in July, and even what was expected when we updated our September forecast. So the third quarter demonstrated much more turbulent dynamics, which is related to the demand. And so in order to be able to bring the economy back to the trajectory of a stable and balanced growth and inflation back to the 4% within the same period of time, there is a need for a tougher monetary policy action. In other words, the starting conditions of the forecast were changed, which impacted the whole of the subsequent trajectory. Thank you. The next question comes online. Marina Ivanova, Vostok Information Agency from the city of Ulan-Ude. Elvira Nabiullina, good afternoon. Could you please tell us, are there any concerns considering the current events in terms of the lending market to collapse, or do you believe that the banks will be able to adjust? And is a banking crisis possible to unfold in the country? Thank you. We have no concerns like that. The lending market collapse is something that one shouldn't be really talking about. The lending activity, although it slows down but continues to maintain high pace, corporate lending is at 20% annualized, a little bit even more. The unsecuritized consumer lending demonstrates 15% growth, without mentioning mortgage, which demonstrate the pace at about 30%. And so our policy is aiming for this lending to be more balanced, and so our forecast for the lending growth next year is positive. We expect it to be at about 5 to 10 incremental percent. Of course, the banks will be able to adjust to the current environment, which is already taking place, and they are in a very good shape and have sufficient capital reserve in order to grow their lending activity. The quality of credit servicing remains a good one. Well, the danger of the lending market collapse may ensue not because of higher rates but higher inflation, when the banks are not ready to give long credits for long term. And so our policy is to not allow for this and make the long-term lending available. Next one, Delia in the last row, please. Good afternoon, Dilara Sonsen from Elvira Novosti. Elvira Nabiullina, I have two questions. The first is about inflation. What do you think? When the price growth peak may happen, should one expect it this year before it starts slowing down, or will it happen in the first one? You can't hear me? Can you hear me now? All right, so when the inflation peak is going to happen in Russia, will it happen towards the end of this year, or in the middle, or in the beginning of 2024? My second question, the central bank today took out from its release such a phrase as the structural Russian economy changes by substituting it in the economic development within the forecast period. Would you say that it would mean that perestroika, this restructuring, has come to an end already? Future price growth, we have gone through that. I mean, the inflation is going to slow down. It was in Q3. But in terms of the annual period, the inflation peak will happen during the spring next year, in many ways because of the baseline effect, because that is the inflation, as they say, 12 months old. Now, as far as our press release is concerned, we have now started using our habitual phraseology, and so the phrase related to the structural changes in the economy can be explained. Then we were saying that as a result of the economic restructuring, serious changes take place in terms of relative prices, and so for this period we are ready to act in a tolerant way, allowing that the inflation may for that period be above our target 4%. The structural changes in the economy are going to continue, but in terms of the large-scale restructuring in prices that was necessary, it already happened last year. And so currently inflation in many ways being defined by the supply side, by the demand side factors. And so we decided it was possible to revert to our usual wording. Thanks very much. Dmitry Morocco, Russia 24. This week, the media reported on the central bank plans to create a closed data room with an expanded statistics that only certain research institutes will have an access to. Could you just disclose certain details about it? Well, first of all, this decision hasn't yet been made. It is just going through the initial discussion. And what we mean by it is this is a common practice in many jurisdictions in order to support the analytical activity throughout the whole country so that an access to data would be made possible to those who analyze things, to various think tanks, universities, experts in organizations. Such data can only be made available or only based on anonymous basis, no specific references to the institution behind any statistics would be made, but the decision hasn't yet been made. We are still discussing it. Just for your understanding, it's not about making certain sets of data available that we are not sharing out with the public at all. We're simply meaning to say that through this particular mechanism, a more granular kind of data could be made available per specific service or analytics. Thank you. Next question from Evgenia Pisminaya from Bloomberg. Good afternoon. The recent measures of the currency control that recently have been adopted, could they impact the future monetary policy, for example, by via ruble appreciation, support the tighter monetary policy period? And my second question, your colleagues, the bankers from the VTB Bank, used to say that this is going to be, today's board of directors of the central bank was expected to be an iconic one, an epic one, like a Battle of Waterloo. Do you feel it that way? And who were your adversaries, if that is to be considered as a Waterloo situation? Well, I think you can apply any metaphors, but we were very resolute to combat high inflation. But as far as taking into account the monetary policy and the very specific currency restrictions factor, we account for the exchange rate dynamics and the expectations thereof. And in our view, it hasn't changed at all. The main fundamental factors here are the export dynamics, imports, the demand for imports denominated in rubles, and the attraction of ruble as the savings tool, which we impact through the key rate. And therefore, indeed, the exchange rate dynamics indeed is one of the factors, and we look at it as a possible pro-inflationary driver if the fundamental factor changes in such a way that it may bring about the depreciation of the exchange rate. We would consider that as a pro-inflationary one, but also possible are changes in the external environment of the nature which may lead to the appreciation of the exchange rate, and we would consider that as a disinflationary factor. Now, in terms of the specific impact of currency restrictions upon the exchange rate dynamics, as we believe, is not going to be strong. If it is strong, that would only be short-lived, but we don't have any data close at hand right now. Whether this particular view is being confirmed or not, we will keep watching for it, although we believe that it would be appropriate and correct to, it would be very difficult to separate its impact upon the exchange rate, because this, as a measure, was adopted against the backdrop of the trade surplus becoming stronger and the key rate growing at the point in time when these two factors considerably influence the exchange rate. But we will see what the data shows and what kind of conclusions it may push us towards based on the currency revenue sales, whether anything changed or not. So we will keep on monitoring it. Dear colleagues, the next question, please. Rita, in the second row. Margarita Marjan, RBK. You have mentioned already the compulsory repatriation of the sale of the export revenue. We understand that there's no full information about it, but maybe the central bank has some sort of an assessment of a possible currency inflow into the domestic market. And my second question is about the 1,000 rubles banknote, the issuance of which has been put on hold. What are the plans to change its design, and what this banknote is going to show on its face? Well, answering the previous question, I already mentioned that to identify the specific effect from a measure like that is problematic, but the exporters selling their revenue, the current data shows that it is growing, and within that period of time, prices for the exportable goods have grown. There are also certain lag in terms of the export revenue coming in. So, therefore, I believe it would be correct to say how much currency might come in because of this measure would be practically impossible. Now, in as far as the banknote is concerned, we shall continue working over the new design of the reverse side of that banknote. We expect that its face side, as previously expected, shall remain. So we will talk additionally about its looks. We would like to slightly change the process within which we discuss the design. We have expert groups per every banknote that includes historians and other experts, and we would like to broaden the kind of experts that are participating in it, so maybe also to have some sort of a public discussion. And so we anticipate that the updated design will come out next year. Thank you. Dear colleagues, please, Elena, in the row before the last one. Good afternoon, Elena Fabrichnaya, Reuters. Could you please tell us, the phrase about the future board meetings disappeared from your press release in terms of whether it is going to consider the appropriateness of the future key rate changes. So what does it mean? And my second question, this measure about the mandatory sale of the export revenue, does it concern all of the exporters, or have there been any exceptions from the list? As far as that wording is concerned, indeed, we decided to send a neutral signal with regards to the rate, because at present a lot shall depend upon the data that we're going to receive, as well as upon our assessment whether we see any stable reduction of inflation. As I've mentioned, there is a probability of the key rate being further raised this year, or skipping it as it is. So, indeed, instead of a moderately tough, we decided to send out a moderate signal. As far as the compulsory sale of the export revenue is concerned, based on my information, I think all of the major exporters have been included into it without any exceptions. The next question comes online. Anna Skripka, the Russian Gazette from the city of Belgorod. Anna, please. Good afternoon. The wage growth has already been mentioned, and you responded by saying that the income growth, one way or another, pushes the inflation higher. To what extent this is a significant factor, and if it is, what one can compensate it with? Thank you. We are talking about quite a tension in the labour market, and that is a significant factor which we've been dealing with since last year, because we see a shortage of all kinds of staff, skilled as well as unskilled, the management staff, and we see that it is particularly pronounced in manufacturing, in metallurgy, machine building, in the chemical industries. And when the demand for labour exceeds its supply, and we are right in this debacle, the employers raise payroll in order to retain people or to attract the new personnel in order to expand operations, and that increases the aggregate demand in the economy, starting to overhang the possibility to extend the supply. That is what we're observing. The indication towards that is the growth of inflation. Effectively, the demand growth that we're referring to is expressed not in the physical consumption growth, but just in prices growing. And in order for the shortage of labor not to transform itself into a permanent problem, and perpetual inflation, one needs tough monetary policy because the wage growth must not in a systemic way run ahead of the labor productivity. Thank you. Dear colleagues, Grigori, second row, please. Grigori Bajanov, Yuridops, Popular Economics. My question is this. Everybody knows about the trilemma of the international finance, but there is a recent survey came out that shows that for the emerging economy, this trilemma, but not dilemma, is effective irrespective of the exchange rate. In case there are no restrictions upon the movement of capital, we consequently are not able to identify the monetary policy as an independent one, and it has to adjust itself one way or another to the monetary policy globally. As a rule, this whole story is linked to netto importance in the countries which are strongly dependent upon the currency debt payment and respectively may feel some very serious problems and challenges in the case of a strong capital outflow. Can one say that past 2022 events were in the similar kind of condition when we have an unstable capital flows, and in order to maintain independent monetary policy, we not only need to maintain the already existing decisions in as far as the restrictions on capital flow is concerned, but rather strengthen them? Or is it such a situation that the Russian economy has attained a certain new level of stability, which envisages that no longer needs for such measures, and we are being pushed back into the trilemma environment? Well, let me ask Mr. Zabotkin to hypothesize on that issue. I would very much like to be brief because it's either something, your question deserves a brief, laconic response or a whole lecture. We feel that the possibility to pursue an independent monetary policy is inextricably related to the issue of a long-term trust to the stability of the national currency. And under the stability of national currency, we mean not the exchange rate stability, because the exchange rate can fluctuate broadly against the changes in the external environment, allowing the economy to adjust itself to the inevitable changes in the external environments that occur based on different regularities. But what we mean is for the national currency to maintain its purchasing power or conversely low inflation. If the national economy is capable to demonstrate its citizens and its businesses and foreign investors that its currency throughout a long period of time is a reliable instrument to maintain value, to sustain savings, then this economy is in a trilemma. And it is very easy to demonstrate this through the case of small open economies, as they say. For example, Switzerland. This is a small economy as opposed to the global financial system, but at the same time, it is quite capable of pursuing independent monetary policy. And why? Because throughout the 20th century, Switzerland has been the country with the lowest inflation. Thank you. Dear colleagues, Marina, the third row, please. Marina Pimenova, NTV Business News. The export duties introduced as of October 1st linked to the dollar exchange rate. To what extent this particular measure, as viewed by a central bank, would help to slow down inflation? And the second question is very popular now, looking at the central bank's fourth time in a row, raising the QE, doing it so actively. People are afraid that that is something that will no longer be stopped. Now, does central bank has some sort of a milestone beyond which this further rate increase is going to be dangerous to the economy? Well, once we see a stable reduction of inflation down to our target level of 4%, that will be the milestone. But at the same time, we forecast that the key rate increase necessary to fight inflation, it will lead to the inflation going down, but at the same time, the economic growth will remain in the positive range. If you take a look at our forecast, we raised our forecast as the economic development figures are concerned in the next year, and in 2025 and 26, based on our estimates, the economy will continue growing. And as far as the export duties are concerned, the exchange rate and the inflation slowdown, please, Mr. Zabotkin. Can you please repeat your question? Your first question, please. The export duties introduced as October 1st linked to the dollar exchange rate. How do they impact inflation? Thank you very much. The export duties, in the form and shape that they have been set in, like any export duties, do impact the way the export parity prices are behaving inside the domestic economy against the very same global price dynamics and the exchange rate. And so the export duty mechanism that has been introduced effectively will be conducive to the export parity prices falling down against the set level of global prices and the exchange rate, and consequently, as far as this is concerned, it will generate disinflationary impact of a short-term nature. It's not that it will perpetually would decrease the inflationary pressure, it will change the current price level, making it lower. And as far as the second question, with your permission, well, the fact what creates a threat to the economy, it's not the interest rates growing, but the accumulated disbalances and the financial vulnerabilities that occur in the economy, particularly faster during the accommodative monetary policy. If you take a look at the global financial crisis of 07, 08, 09, and the kind of the volatility that we are observing currently in the foreign financial markets, in many ways, this is all related to the accumulation of a very high level of debt at the low interest rates that are quite burdensome when the rates become higher. But not the rates are at fault, but the accumulation during the previous tightening and toughening of the monetary policies. Thank you. Next question comes online from Natalia Mitahina, RBK Kaliningrad. If in a separate region, and specifically here I mean the Kaliningrad region, the inflation because of the obvious reason is stronger and is higher than in the rest of the country, can the regulator apply certain separate measures in order to bring it down? If positive, against which threshold level these measures are going to be kicked in, or the monetary policy measures in individual regions are out of the questions, and this is possible only across the whole country simultaneously. Can you imagine that currency exchange rate in one particular region would be strongly different from the currency exchange rate in other regions? Hardly likely, because we've got the same ruble throughout the whole country and even outside of it. In the very same token, the interest rates for ruble can only be one. We are pursuing the monetary policy across the whole Russia, and this tool of ours, the key rate, is what we impact the aggregate demand throughout the country rather than just a regional one or a sectoral one. Now, what will happen if, even hypothetically, we see that the central bank will try and set different rates for its transactions in different regions? Now, in the regions where the key rate is high, people will run head over heels there to put their money in a high deposit. Now, in the regions where it is low, they will start borrowing. That will be a disproportion, but the situation will even out anyways, because we have this freedom of capital movement within the country through these disproportions. But at the same time, I do understand that there are certain situations, like, for example, in a certain region, one may face a much more considerable price growth, primarily because of what they describe as the demand shocks, like supply chains being disrupted or logistical expenditures grow for the supply of goods into a specific region. These are structural factors, but the monetary policy measures won't be effective to be applied on that, because these are the measures to develop the market, to unbundle bottlenecks and measures of the structural fiscal policy. Thank you, dear colleagues. Fyodor, in the last row, please. Fyodor Ivanov, Invest Future. Good afternoon. My first question is related to the Russian economy and the reduction of the currency impact on it. Has it improved? Is it more effective now? Secondly, you mentioned the Middle Eastern conflict and its related dynamics to the energy, global energy market. Could you please tell us to what extent the Western investment banks are estimating that the oil price may reach up to $150, $250 per barrel? To what extent that might impact the Russian economy and the monetary policy as well? Reducing the currency component within the Russian economy and the Russian financial system is the kind of factor which makes it possible to pursue a more effective monetary policy without any doubt. Our decisions with regard to the key rate will be more effectively translated into the economy, because we see that this currency ratio reduction takes place, and this is the kind of a policy instrument that we introduced before the events of last year. So this is an important factor to pursue the monetary policy. Now, as far as the Middle Eastern situation is concerned, there are so many uncertainties in it, and it will all depend upon how the situation evolves there. There are certain experts who believe that this might lead to price growing, but if this price growth turns out to be significant, that will undoubtedly impact the global economy. The global demand may fall because, on the one hand, as far as the Russian economy is concerned, that could be the export price growth, but the demand size may go down because of the global economic slowdown. So this is an uncertainty factor we do take into account when we make our decisions within the risk factors. But to give you a very specific expectation of how it would all manifest itself is difficult right now. Colleagues, please. Any more questions? Ivan? Good afternoon. Ivan Shigin, Forbag RU. My question is, some experts currently use this buzzword that we live in some sort of a new reality. And they argue about whether there is such a new reality or not, in as far as the macroeconomic indicators are concerned, that specifically we got this rates in the range of about 2-digit ones, and so one needs to really grow used to it, learn to live in a new way, because we used to have in the past even tougher conditions, and so basically we are right now in some sort of a new reality that one needs to adjust to and keep on going. Or shall we go back to the values that we remember being in the past, will be just one-digit values soon, or the two-digit ones will stay with us for certain years to come, and there won't be anything happening that would push us back to what it used to be in the past? Well, indeed, the rates are high, and next year, as we expect, will be the year of two-digit interest rates. But we act on an assumption that our decisions, the one that we used to make and continue making, will lead to a stable reduction of inflation down to our target. And next year, we will be able to move to the reduction of our key rate for 2025. We forecast the average 7 to 9%, which is below the two-digit values. But a lot will depend upon the way the situation is going to unfold. I shall not repeat it because, the external economic situation, the fiscal, the inflation expectations, labor market, and so on and so forth. So the period of higher rates is what we need to pass through in order to lower inflation, and so for the rates to go down, but without inflation accelerating. Next question online. Ivan Zubarev, Arguments and Facts newspaper from the Far East. In a street person understanding the dollar exchange rate red line this year, 100 rubles. If it's above, then urgent stabilization measures are required. How does the Central Bank of Russia define this kind of a red line? Against which line stabilization should be instituted? Another question, up to which exchange rate level after the increase of the key rate ruble should go down in order to be able to precisely state that the ruble has appreciated? Well, it was on more than one occasion that I used to say they don't have any notionalities of red lines. We act on the principle of floating rate. But without doubt, the exchange rate factor and its dynamics is what we account for in our decision making. The urgent stabilization measures, we do have such tool sets, including currency interventions, and we resort to it not when an exchange rate reaches some sort of a level, let's say the topmost rounded figure, but when the financial stability risks manifest themselves, when we see that liquidity disappears from the currency market, then we may resort to such measures. But otherwise, the exchange rate depends upon the fundamental factor and must reach a certain market equilibrium. And this kind of a market equilibrium is what we follow when we make our decisions. Anna, please. I have a very obvious question. The Ministry for Economic Development has already raised its forecast up to 5% for next year's inflation. Your range is 4.5%. It means and shows that you no longer hope to get to 4%, and you are inclined to really accept the 4.5%. My second question is, are there any other measures that are being discussed to support the ruble as tasked by the President, or has everything already been used up? Won't we see the any restrictions imposed upon the ruble-denominated transfers? Because in your financial risk reviews, you yourself stated that the banks from unfriendly jurisdictions represent a certain factor that creates pressure upon the ruble exchange rate. As far as the inflation forecast for next year is concerned, we intend, by the end of next year, to bring inflation down to the target of 4 to 4.5%. We believe that is close to the target. But the pro-inflation risks currently are quite strong, and we arrive at a target inflation level from the top, and that is why this forecast range is what we decided to specify. Would you like to add something, Alexei Borisovich? Yes, certainly. Just for your understanding, the 4 and even 4.5% in terms of the annualized inflation towards the end of next year implies that the current price growth, the dynamics by Q4 next year will be at the level of 4% annualized, or maybe even a little bit lower. And consequently, that will mean inflation being brought back to our 4%, close to 4% target. So we continue to expect our policy to be sufficient in order to bring inflation back to the target, close to 4% next year. But to do that, we would need to maintain the key rate at a higher level for a continuous, slightly more continuous period of time. As far as any additional measures are concerned to restrict the capital movement inflows in different forms, the central bank is not being involved in such discussions right now. Colleagues, Maria, in the second row, please. Illusion Maria, Bitcoin. or Bitcoin. The central bank press release took out the statement referred to the appropriateness of raising the key rate. You confirmed that the signal is neutral, but in the central bank forecast, it allows for the key rate to be raised in December. Why is there such a deviation? Does it mean that your signal is truly neutral? Well, let me try and rephrase what the governor previously explained. Yes, the signal is neutral. It means that based on today's discussion, the board of directors, based on the information that we have in our possession right now, considers it is less compelled to think differently for the next board of directors meeting, but at the same time, based on our estimate of the balance of risks, and as far as inflation is concerned, we do not rule out the possibility that certain additional decision to raise the key rate is something that we will have to make still within this year. But the probability of this kind of a decision will largely depend upon the incoming data compared to when we were considering it in October, based on the information that we have had in September. And I hope you understand what I mean by this. Natalia, the last row. Good afternoon, Natalia Troshina, Moscow Komsomolets, a newspaper, economic publication. My question is this. Financial experts quite often describe the current subsidized mortgage situation as critical. Is it possible to expect a bubble to grow? And to what extent you may consider this to be a source of crisis? My second question, the government is very cognizant of the various recommendations by the Bank of Russia about the subsidized mortgage in terms of this market segment overheating, and the high initial contribution. So if the central bank is going to continue recommending further, what is going to be increasing the original contribution or tougher requirements to be placed upon the borrowers or something else? In September, only within 30 days, the mortgage statistic grew by 0.4%. And so you cannot really describe it simply just overheating. That is why here we see risks. I've mentioned them multiple times, and the confirmation of these risks remaining rather than dwindling is the continuing gap between the primary and secondary housing prices. That is why we started taking measures, amongst other things related to the introduction of macro-prudential markups as of October 1st, sufficiently serious ones. We believe that these will impact the lending volumes, particularly the risky ones, because that really plays down the share of the risk-related lending. The key rate growth also has a good play in the market segment, where we see that the mortgage in the market segment is slowing down, but nevertheless the level of activity remains. And of course, a broad coverage of subsidized programs by the subsidized programs in mortgage means that these risks, in the meantime, sustain. So we believe, and we've shared this kind of a proposal with the government, that the requirement placed upon the original contribution in the subsidized mortgage program is concerned should be made tougher. But that is for the government to decide. Artyom Kulishov, Vedomosti. So what's your attitude towards the idea of buying out the foreign-owned shares in the Russian companies in the interest of the whole society, rather than just individuals, like for the national welfare fund to be there, and how to assess the possible loss of a risk of loss of trust to your policy if next year we, for the fourth year in a row, do not reach the target level? Let me begin with the second question, and then I would ask you to explain the first question. Actually, we believe that it is very important for inflation to be brought to target next year, because a prolonged deviation of inflation from the target for several years indeed may undermine trust to the monetary policy pursued. It is extremely important in the inflation targeting mode. This is an important instrument in terms of maintaining trust, and that is something that we hold dear. And so losing such trust would mean us losing our toolkit that enables us to pursue this monetary policy. You're right, it is very important for us to reach the inflation target next year. Could you also explain your first question? Very recently, a number of experts proposed that the shares owned by foreigners in the Russian companies to be bought not for the Russian companies, but the National Welfare Fund, meaning to say, not in the interest, said the discount, not per specific buyers, no matter who buys, individuals or You mean to say that a discount of this kind is going? No. That the benefit from this should be derived not only by corporations and their beneficiaries, but the whole society, so that the earnings should be put into the National Welfare Fund. Well, Alexei Borisovich is correct. That would mean nationalization, won't it? Because the National Welfare Fund effectively holds the government funds and government ownership for. We need to take a look at the specific proposals because I haven't seen any with the subsequent open, sale into the market. So it has to be very specific. Dear colleagues, thanks very much. Our time is coming to an end. The very last question comes from Ilya in the second row. Ilya, also Frank Media. I think that in terms of this question previously asked, I don't know what the experts are saying, but in spring this year, both the Minister of Finance and the Central Bank proposed that the shares of partially bought out foreign ownership should be put out into the market. But I haven't noticed anything like that. Even the Moscow Exchange, where the Central Bank of Russia is the shareholder, no additional stock like that has been released into the market. Now, do I understand correctly that this whole idea is in limbo, and the big companies, the big capital holders ended up having this privileged right of being able to buy a foreign-owned stock with discount? And the second point, like the Central Bank and the Minister of Finance came up with some sort of a proposal in terms of the long-term savings KPIs. Could you be more specific and tell us how much and for how long this long-term savings programs is going to have participants in it? I don't know whether it would allow me to raise the third question. You won't? All right, well, let me try anyway. So, respectively, your former first deputy governor, Sergei Shvetsov, on multiple occasions proposed, because of the minority shareholders exiting, simply since it was represented by foreign owners who have exited the Russian market. Now everything is on the C account. So he proposed to the regulators to take charge of this process and through various administrative measures somehow influence corporate governance and protect the rights of minorities. Do you agree with this idea? And if positive, do you foresee any measures taking place? Thank you. Well, let's see. The first question, issuing additional stock. Well, the government commission's requirement like that is, I know, exists. It is being applied. But the reason as to why we don't see any IPOs, because there is a certain time frame that is being given from 1 year to 3 years, because a company, when a new owner comes in, needs to prepare respective corporate governance changes and prepare the issuer for the initial placement. So a certain time frame is being envisaged, and the Government Commission is going to monitor how these requirements are being performed, and hopefully we will see that these will start taking place. Second, and as far as the long-term savings KPIs are concerned, the discussion is still underway. As soon as we're ready to announce these KPIs and share them with you, we'll do so. As far as the corporate governance is concerned, well, this is a very crucial kind of an issue. We see that because of the sanctions, because of the external restrictions, there were certain procedures that became more lax in terms of the access to disclosure and others. But I believe that it is impossible to solve everything through administrative leverage. It has to be legislative, and we need to bring back some of the norms that were eased, and we can do this in the form of recommendations, because corporate governance is such a thing that only the owners of respective corporate entities can influence. So here I see the possibility to resolve this issue being within the setting up of
rules in the legislative way. Dear colleagues, thank you so much for your very interesting questions. Thank you so much.